Hey everybody, welcome to the Bullish Rippers YouTube channel. We post all the recordings of the Rippers Twitter Spaces to this page. So, if you ever miss a Twitter Spaces, this is the place to come and check. Make sure you're subscribed and hit that like button if you enjoy.
What's going on, Jay?
Hey, not too much. How you doing?
Living the dream. Back, had traveled a lot since I last saw you.
All right.
Yeah.
And you're hosting a ton of these.
Oh yeah. Well, today I've been cutting down because I was on some flights, but yeah, we had New York. Crazy if that was on Friday.
Mm-hmm.
I went down to Tampa on Sunday, and then I just flew from Tampa to Baltimore today.
Jeez.
So, yeah, it's been like 4 days of craziness. Not gonna lie.
Hopefully it's all good.
Oh yeah, thank God, everything's going great. What have you been up to?
Nothing. Yeah, just some volatility, which is nice. Not for the right reasons, of course, but still, still seeing some action in the market. And now I'm getting yelled at by my son because I promised to watch a Sixer game with him, but I told him, give me a half an hour and I'll come back and I'll watch the second half. So, it's all good.
True. I saw they just announced Harden as a starter for the first time tonight, right?
First home game starting. So, yeah, he's just mad I didn't get him tickets. That's what he wanted. But one of these days we'll get to see him.
Yeah, it's been a little bit since I went to a Sixers game, but it's a good time.
Yeah, definitely. Who else do we have talking? I heard Fami sent me a note, said he couldn't make it. I was bummed.
Yeah, I know. He sent me a message too. Said he'll definitely get on one with us next week. So yeah, unfortunately, he wasn't able to make it, but we have JaxCapital, which he is coming. He said he's just finishing up something and he'll be in. We got Stock Market News who just popped in here. I actually just put out a tweet. Yeah, just put out a tweet tagging the rest of the speakers. Yo, Evan, what's going on?
Nothing much, just hanging out. Excited for the space.
What's up, Evan?
Doing good, man. How are we?
Good.
So listen, though, I hear we're talking about the Sixers. I heard us bagging a little on the Knicks earlier. I think we're on very opposite sides of sports stuff. You from Philly?
Yeah, I grew up in Philly. I'm a Yankee fan, and then everything else is Phillies.
Okay. I'm a Mets fan and Knicks, and so on. We got some good competition going. The other side of everything.
Exactly. Holy moly, Mets. Oof, awful.
One thing I will say, I know we don't got to turn this into a Mets space, but listen, if we do end up getting the season cut in half, let's say, I mean, the ace pitcher we just signed, who's old as hell, I mean, it's only got to help. I mean,
it's not a bad thought.
It's bad if we, age him another year and he doesn't get to play, but that half year, hey, might come in big.
I like your optimism.
Love it. I see TSDR in the crowd as well, so I went ahead and there we go. Jack pulled through. Good to see. So Jack Rains is joining us. He actually writes for Liquidity and has his own newsletter as well. Really, really cool stuff. We just did a full hour actually kind of spotlighting his stuff. What's up, Jack?
Hey, I just wanted to say I'm a Braves fan, so go Braves. That's it. World Series champs. Sorry, guys.
Big yikes.
All good. Congrats.
Appreciate that. Anyway, continue. We'll be mainly listening.
Cool, man. Well, definitely feel free to pop in, too. I know that you keep an active eye on the markets. TSDR, what's up, man?
Oh, what's up? Just hanging out with the kids. Probably will get them to sleep soon, but I will gladly come in and give some commentary, answer questions, and give my thoughts.
All right, perfect. Appreciate that. So I think we're going to go ahead and get rolling. We should have exclusive popping in, too. I shot him a message. He did confirm for this one. I think Stock Talk may come in. If anybody has a moment to just go ahead and retweet or share out the link to this space, that would be huge if we could get that on people's timelines. I think like half of FinTwit is shadow banned right now. So the more people that can even just interact with that up top and just throw a like or anything like that, the more we'll be able to get in here and chat with us. So let's dive right into things. Bit of a crazy week. We had the State of the Union last night. A lot of stuff was talked about in it, cutting costs, raising wages. There were some different plans. I definitely want to hear some people's on here thoughts as to how they think that's going to factor in. We got a bit more confirmation from Powell today on a 25-point rate hike versus the 50-point, which was, clearly on the table and something that I think would have spooked the market. I believe the Dow closed up 600 points following that news. And at the same time, stuff continues to rage around the world. Russia took control of their first major city within Ukraine today. That prompted Spain and a number of other countries to send over a lot more support. So we're really getting deeper into this, war, and there's a lot of things that come along with war in the market. So those are some of the topics we'll be talking on tonight. I'll turn it over first to my co-host, Stock Market News, to see if he wants to add anything into that, and then we'll pop around to the speakers.
Only thing I would want to add in is a little bit of earnings. I know we're past the peak of it, but we had a couple of stocks today. We were live a little bit earlier with Jay. I know there was a couple of stock earnings he was watching, so I think there's a good talking points we can have there. But I'll let us go around. Let's get started, and Jay.
Yeah, for sure. What's up, Jack? I saw you just came up.
Hey, how are you guys? Good to see you.
Good. Thank you for coming
Absolutely. It's my pleasure to be here. Good company.
on. Perfect. Okay, Jay, I'm going to start out with you. You've been down there on the floor. Glad we had the chance to meet in person and speak at the NYSE on Friday. Would love to get, from your perspective of being in the thick of things, what is the sentiment right now? What's going on? And what's the approach that, institutional investors are taking to the market?
Yeah, the sentiment, it's not as, panicky as they like to make the headlines, or they like to show those pictures of, befuddled brokers, myself included. Thursday, the 24th, is when, Russia invaded Ukraine. That was something that had been telegraphed for a while. I think the quote was it was imminent. And, the news came and the market sold off aggressively right on the open. And we rallied slowly. The market was completely oversold to begin with, so it wasn't like we were blindsided. This came out of nowhere, and oh my gosh, the world is coming to an end. We finally got it, and as horrible as the news is, it's one of those things that, okay, now where do we go? And what happened was people came in, they bought it. It was fearful on the opening. It was fearful for the first hour or so before we slowly started rallying, and then you realize, wait a second, this is getting a little momentum. Let's see what the president has to say. And he, the sanctions were nothing shocking or surprising, but it was a calming tone, and from the market's point of view, and we continued to rally, and then the momentum just swung the other way, and we went from a breakdown in the S&P 500, which actually happened the day prior, to recapturing those levels. And then you had a follow through day on Friday, and then the last few days to start this week, we're watching headlines. Everyone's watching the tape, watching to see what the next big things are. You hear peace talks, we rally. You hear cities taking over, we sell off. So these are right now we're in a more wider range than we're used to, so things are going to be volatile. 4,300 in the S&P seems to be that line that traders are focused on. I know I am, where if we stay above it, which is basically goes back to the January 24th lows, the February 24th close, I remain cautiously optimistic that the lows are in for now. And then the last thing would be the Fed. So we went from Ukraine to the Fed, and we knew this was coming. We knew Jay Powell is going to talk again tomorrow. But today, I think he hit us with what we needed to hear, and he telegraphed what the next move is. It's a 25-point basis hike. There's no more 50 on the table. We're good to go. He still has a hawkish tone, but he is very calculated in how he says things. He's always been. He doesn't surprise people. His Fed, presidents, when they go off and speak, they say things that may rattle markets, but he's been pretty straightforward. Not always right. Transitory was definitely a wrong call. But this gives us, pause. If we don't get any major headlines out of Ukraine, if Putin doesn't do anything crazy, I don't think the Russian economy, being the 11th largest in the world before before these sanctions, and the fact that the oil that we import from them is less than 10% of our total imports. I think it's 8% is the number I saw today. The economic effect of this isn't too bad. So I think we chop for a while, but I think the worst of this is over, and we start to focus back on the Fed, barring any major catastrophic news out of Ukraine.
Fantastic analysis there, Jay. Appreciate it. And certainly it did feel like the market was oversold. I have heard, though, a bit conflicting points here. We did a space, I think it was Monday, might have been on Tuesday, where people were really going back and forth whether there's one more flush and then we start to kind of recoup and recover from that. We were all the way back down. Most stuff is, come back to either COVID lows or, pre-COVID levels. But when you say oversold, it's a hard question. It's an impossible question to answer, but do you think that we potentially found a bottom? Yes or no? And then what would kind of make you want to lean towards one side? Are there any indicators or pieces that fit in?
Yeah, I never want to go on anywhere, whether it's in informal spaces like this or just in front of the media and say, oh, this is the low. It feels like it could very well be the low. We had the retest, which is something I thought we would have back in the COVID days. We had that flush out and we never got the retest. The V bottom is the hardest thing to call. As a CMT, you live for V bottoms. You love to see these things, but you really can never predict them. I like double bottoms. I think that is safe to say that we may have just put one in. So I'm optimistic there. We were definitely oversold, in my opinion. I follow the RSI. I'm an RSI MACD kind of guy. From a longer term horizon. If you want to talk short term, which I did for years, and I've moved away from the minute to minute trading, then I would throw in Anchor VWAP, and we talked to Brian Shannon all day about that. He's a good friend, and I love what he does. But the indicators to say it was oversold. Let's be frank. The Nasdaq was in a bear market. It was down 21%, I think, on the low. S&P was down 14%. These were big moves, and then you look at the individual names. My God, the ARC names oversold. If there's another superlative to oversold, that was ARC. It was as ugly as it gets, and you're getting some dead cat bounces, and there may be a few gems in there. Not all 40 holdings in that index can be that bad, that's for sure. But yeah, so I really think, we have a nice double bottom. We have put in the work, we're grinding, and the way, and I'm a very big seasonal guy, the way things are shaping out, I think this is going to be a second half story, and I think we're setting up for it, and especially in technology. I do like the way the Microsofts and the Apples have been acting, and even a stock, and I mentioned this on a call earlier, that had big news today, Ford. Ford is starting to look like it may have found its footing yet again with the spinoff of the EV news. So those are the big things. But when I say oversold, I'm usually referring to RSI levels. I don't even think we were oversold. In fact, we had a nice bullish divergence. If you're to look at an S&P 500 chart, the SPX or the SPY, whatever you choose, the RSI did not make a new low on February 24th compared to January 24th when the index itself did. And that's a silver lining if we're looking for them to show that, yeah, maybe things are turning around.
Awesome, Jake. Appreciate the answer there. And yeah, absolutely. I never think it's good for someone to call the bottom or not, but I was just looking for kind of the reasoning around your position. I appreciate you providing that.
It feels comfortable that barring any, like this Putin is crazy. And, when you hear somebody talk about nuclear, capacity, it puts you on edge. It puts traders on edge. It puts us as parents, as human beings on edge. But, as a trader, you want to, try to shut out that noise. And as a technician, I'm following price patterns, and the price patterns are telling me that we've taken on some pains, we've taken some shots here, and it looks like things are starting to turn around, and technology may be starting to turn. And if you look at the XLK from an iShares point of view, that's starting to show signs of life again. And if you're going to lead, you want to lead with technology. The financials, that is another interesting story into itself. I mean, the insurance is strong, and they were making new highs recently. I think that's the place to be in the financials. Regional banks hanging in there, but the big conglomerates, the Morgans, the Goldmans, the Citi made a new low today. This was one thing I definitely got wrong in the beginning of the year, because I thought we would see strength in the financials. The 10-year is not as strong as I thought it would be, given a raising rate environment and all these prognosticators that called for 7 rate hikes this year. I never was in that camp. I think 3, maybe 4 is in the cards. And the way, going back to the Fed, the way Jay Powell talked today, he gave himself wiggle room, which he does very well. And we're going 25. We could go 50 if needed. We're watching the signs, but we're definitely in that rate raising environment. But he's going to look at the data. And when asked about Ukraine, Russia, he did a great job of mumbling and not answering the question, which I tried to do many, many times. We don't know what impact it's going to have, but when I look at the impact, obviously, energy is the big thing. And I talked about one stock. There was only one stock that I know that's in the S&P 500 that has direct impact from this situation. That's EPAM, which got shellacked. And the stock was a $700 stock back in November. It traded as low as $200 after it released earnings earlier this week and said we can't give forward guidance because we have so many employees. They have over 50,000 employees. They're based out of Bucks County, PA. But 18,000 of those employees, it's an IT service company. They're based in Russia. They're based in Ukraine. So I would assume they have contingency plans to alter, their employees' work to other locations while we, hope everyone's okay over there. But that was the one stock of all the stocks I researched out of energy that really has been affected by this. And it's an interesting chart for those that want to go back 5 years. This is an epic historic move because it's been in a great uptrend for 5 years until it broke in November. So there may be value there, but otherwise, I think I think we're in a good place, and the energy move has been phenomenal. If I was in it, and I do have some exposure myself, you want to take a little off the table, because the spike, we talk about oversold. Well, this is definitely overbought. It's getting a little toppy, but it could extend for a while given the headlines we're seeing.
Appreciate the insight there.
Yep.
Okay, we're going to bring in a couple of other speakers as well. Similar question there, just general thoughts on the market here. We've talked a little bit about earnings and rate hikes and other things, and feel free to throw any other macro events into the picture if we haven't already touched on them. Jack, would you like to go next? Oh, sorry, there are 2 Jacks. That is my fault. All right, Jack Hurley.
Yeah, sorry about that. Yeah, so I mean, my general sentiment, I'm usually on the other side of the fence where I have a hard time pitching things to people at certain valuations, and when they come in a little bit lower, I start to see a little bit more rationale, and I like to live in a range where it's the most rational decision I can make, and so from my perspective, I think I'm focusing very much after 2 rate hikes. I think after 2 rate hikes, people will have more appetite for risk. And I think, previously said the ARC indicator is very helpful in those names to get an appetite for people who are willing to get back into risk. The oil markets, I think the refiner schedule is also very important to keep track of because there's been very heavy service in the refiners, especially in the U.S. domestic area. And so I'm looking at refiner names to see their schedule of maintenance and capacity changes, because I think that's one of the leading indicators to see how much oil can come back online, at least in the U.S. market, which is typically a good worldwide indicator to an extent. Iran, I think, is still a wild card. And the oil situation with Russia itself, I think, will remain very tempered. But they will be able to divert a lot of that business to something domestic and probably displace most of that. For example, the Rosneft deal with Exxon, that was troubled since the beginning. And so I'm sure that they have contingency plans along all of these business segments, at least in the energy case. So, like, from my perspective, I focus mostly on the growth side in many of my names, at least that I'm focusing on active investing and growing positions in. Many of my heritage positions have been growing for years. And so those I'll look at for relative strength and things like that. But when I'm looking for where I'm adding money, it's in many of these growth sectors. And so I'm talking about names like STEM or GWH, Fluence. And so all of those will track with risk and with growth. And I think that those have come in very to more attractive valuations. And so the execution of those businesses is what people are going to look for at least picking the more attractive versus the least attractive. And I think the SPAC space is starting to show some of these cracks one example is a technology that works very well, but the management has not executed, and that's EOSC, which is very mindful to me because I like the technology. It's an old ExxonMobil patent who I worked for several years. And so it's one of those cases where you had this litany of businesses go public, and it's going to start to show which ones can actually execute on the promises that they made and which ones end up falling very short. And so I've tried to cherry pick. Some of them I think are more reliable or credible than others, and why and when I should lean into those. And so names that come to mind are things that are below 5 times earnings or revenue and that have direct visibility and a very reliable supply chain management system where I know they've either procured or can procure their forward-looking guidance to a fair extent of probability. And so, a name that jumps out to me in that regard is somebody like a STEM or a Fluence, where they're going to be able to procure many of their materials because they're going to pay extra to get it done, or they've indicated that they've already got the materials they need. And so I think it's important for people just to have a realistic expectation of what they can actually deliver, and remember that the supply chain should hinder their performance for the first half of the year. And you're seeing that across all of these names that are relatively new to the markets. Sorry if that, like, for them, which is where I like to live, they're not quite at the level where I'm kind of watering at the mouth. And so if some of them were to get to like 1.5 or 2 times revenue, I wouldn't go based off EBITDA just because that's a little bit unpredictable at this point with tax rates, interest rates, and things like that. But that's kind of the next level I'm looking for in many of those growth names. In the value names, I'm just going to depend on cash flow, take dividends in as cash, and try to generate as much free cash flow as from my personal statement to buffer through the period until the second rate hike, and then see if people step in terms of risk appetite after that second rate hike is behind us. Because I think the indication of going back and forth between half and a quarter, if they do a half but they do less hikes, I mean, people are going to be jumping at the bit if some of these names actually perform relatively well from a business standpoint. And so you're going to see names, I think, like Overstock is one that's performed relatively well, surprisingly, on crypto news with their T0 circuit. And you've seen the stock come back from 36 or 37, and it's back up to $55 per share. And so that's one name where their fundamental business performs relatively well. They're technically marginally positive, but I wouldn't, bet on that. But the stock has performed well and it's held up. And so I think the appetite is definitely there for somebody who, if you have the sum of the parts to justify the number on the stock. If you don't, and they underperform or don't deliver, they're going to be punished, especially in a rate hike environment. So I'm just avoiding the landmines, and I'm trying to get them at numbers I like. So that's my general sentiment. The Russia situation I do find very intriguing. I was born over there, so I have a little bit of a personal feeling or sentiment towards the Ukrainian area. I was born in Tula, probably 50 or 60 miles east of Ukraine. And it's a very sad time, but when I take my personal hat off and I put my investor hat on, I remember that this is a time where people are panicking, and that's typically where you want to make sure you have ammo in your arsenal, and that you know which names you want to execute on, and you make very decisive and rational decisions at which levels. And as long as I stick to that disciplined playbook, I can't be upset with the decisions I make, even if the market comes down a little bit more. I'm looking at years, not days.
Jack, one quick follow-up question on that. And just because I've been curious about this since our space last week. So we actually started a space last week on Wednesday during that the invasion started during that space. We actually ended up kind of starting some live coverage before we ended it. One of the things that has been really thrown out there by several people has been I believe the neon gas and the palladium that comes typically from those areas. And yes. I've been watching AMD and NVIDIA, and AMD's up 12% week over week. High, it was up 18%. NVIDIA, and obviously these names kind of were beaten down and stuff, but do you expect NVIDIA up 14%, pretty much at the high since then. Do you expect a problem in the supply chain for these?
So for the individual companies, or for the Palladium going in between regions?
Yeah, pretty much for the Palladium and the neon gas moving between regions, affecting really the sector as a whole.
So I would expect it for a 4 to 6 month period, for the depending on how long the conflict actually keeps going on. But I would have to sit down and look at alternate supply chain options. Many of these companies will have contingency plans, maybe not in the immediate future, which is why this was a little bit unexpected. So I would say in the coming quarter, it's highly likely. But I think there's likely contingency plans into the second half of the year that they'll have to execute on. I would also caution that palladium is also used heavily in refinery catalytic converters and refinery operations. So I would really look at those as well as a leading indicator. And hydrogen generation as well requires palladium. And so those are other areas that you can look at to look into that. But I would say at least at a minimum, if there's a war zone going on, there's likely for the coming quarter going to be a heightened disruption.
Okay, I appreciate the insight there, Jack.
No problem.
I'll come back around with more. I just want to give TSDR and others a chance to come in here, and then of course, Stock Market Reviews, if you have any questions or follow-ups, feel free to do that. TSDR, bud, you get to speak.
Yeah, what do you want me to speak about? I'm just kidding.
So I just, from your perspective, you're, super actively trading within this market, working off of the volatility. So what have you seen kind of being in the ditches?
So I guess three things. A lot of the stocks I trade, those high beta, growth stocks. For those of you guys that don't know, I mainly just day trade, just scalp intraday setups. For a period of sometimes 5 and 10, 15 minutes to an hour or the whole session. When the market was slightly gapping down yesterday. I want to say I'm having trouble recalling. In fact, I'm going to briefly take a look so I get this right. So when the market was slightly gapping down, on Monday, I noticed, to me, which was a really good indication for me to go long on Monday, after we had a couple pretty big update green days in a row following Thursday and Friday, following everything that happened. Obviously we needed a little bit of consolidation, but I never let a day go to waste. And there's moves to be made every single day. Anyways, we open up the day down a certain percentage. I think it was around 1%, maybe a little bit less. When you typically see a lot of these high beta growth stocks, whether it be Tesla, Nvidia, UPST, Square, Coin, what have you, SE, you typically see stocks like that down closer to 3% or 3.5%, 4% when the market's gapping down 1%. And I noticed that a lot of these stocks were opening essentially flat or down 1% or 1.5% with the market. So to me, that was a really good indication of a little bit less weakness in a lot of these growth stocks. So I was able to go long a little bit on Monday. And today I noticed pretty much the exact opposite. And until later in the day, but most of this morning, while we saw some strength in SPY and the Qs, a lot of these stocks that I like to typically trade were still down 5-6%. Square, mRNA, Zoom. Zoom had their earnings. SE, had a terrible day. Baba, Baidu, a lot of these Chinese stocks, and so the list goes on. So there was some relative weakness in those names. So I don't know what point I'm trying to make. It was just I guess an observation. But going forward, these past 4 days, from a technical perspective, we've been in a fairly tight range. Speaking from the past couple months or a couple years, where the spies in this range from about 427 ish. Up to about 439 or 440, we'll call it. Just consolidating within that range. There's definitely been some tradable action in that. But to really make a significant move, we will have to break one of those ranges. And if we end up breaking to the downside, this is just a lower high right now, and that means we'll be likely be heading back towards the lows. I don't necessarily think that is going to happen. That's not necessarily my bias. I think we're going to consolidate here and head back and kind of give another shot at this double top around 458 from earlier in February on SPY. But another thought that I had this evening was, and I've talked about this before, how well the market is digesting this bad news. Like when three things really. Russia invading Ukraine last Wednesday evening, and then the market opened on Thursday down 3% and closing up 1.5% on SPY. What was really encouraging to see buyers step in, and a little bit of strength in the U.S. market. And then I lost my train of thought. Sorry, my daughter just came into the room. And then this. Oh yeah, digesting. Sorry, digesting the three things, and then the threat of nuclear war over the weekend. I know it was nothing more than speculation. I guess it's a valid fear and whatnot. If things really go sideways, and then to see the market digest that and then trade sideways, even showing some internal strength and stronger market breadth as the week goes on, and with Powell talking today and again tomorrow, talking about inflation and rate hikes, and seeing the market again digest that, what is really encouraging, because what I like to see when a potential bottom is in after a decent correction or downtrend is for the market to digest bad news and react positively to it. So that's very good to see. I was very bold early in January. On January 13th, when we really made a lower high and really started this nasty downtrend, to say like this is bear market trading, or at least I'm treating it as bear market trading day to day. Are we in a bear market? I don't know, but it is bear market trading, and I'm also very bold to say that I said it on Thursday and Friday last week after the trading, that I strongly believe it'll be very difficult to break those lows on SPY. There's a lot of money on the sidelines, and I think after seeing this news, buyers will continue to step in, and I'm confident that we are going to at least consolidate for a while, if not move higher in the near future.
Okay, absolutely looking for that consolidation. I think it's due time, but even if it takes maybe a month or so of trickling around, I really don't think that's a bad thing. But I agree with the sentiment that we've been hearing throughout here of we potentially have stopped this free fall, which we were seeing, and obviously we came down a lot of key levels, and perhaps it could have been seen maybe a month or two back that we were going to come down to here, but hindsight is 2020, and here we are. So we're going to make the most of it. So I think we're going to go over to ProblemSniper, who came up, and then what I'd want to go through for the second half of this is just talking more opportunities, where we see opportunity in the market. I think people come into these because they went up on that request. How's it going?
Hey man, pretty good. How are you guys doing?
Oh, we're living the dream. Obviously it's pretty wild and wacky circumstances, but more than ever, personally grateful for the circumstances where we have the ability to come and do things like this. And lot going on, but still that's kind of my instant thought pattern. But I want to bring it back to you with what's been going on by you, and what have you been up to in this market?
Yeah, I mean, I mostly am trading day to day, like just what TSDR said, and today was not the day to trade at all. Mainly because how garbage the movement of the premiums was today, was in the right direction of most trades, but then I was expecting, like, on a 3-point pop on AMD, was kind of expecting a better move, but Powell came in and kind of gave us some certainty with respect to that March rate hike, with him being very clear that they are going to try with a 0.25, and there is some uncertainty with the war, and then he also clearly said they have not yet decided anything on the QT, whereas there were all these speculations, people were talking about QT starting with the first rate hike and things like that. So overall, I think he got that volatility down, and it was not that great for options traders like me, especially who try to go after weeklies and bi-weeklies. So overall, it was a nasty day, or day to, like, probably sell options premiums was one of the best days, I think, was today. But overall, seeing a lot of flows still in oil sector and the commodities per se. But these trades have started to look a lot crowded. So I did go short on some of these oil companies that are out, that are looking a little crowded. There was a huge flow on CVX and ZOM and like ExxonMobil. We did see that this morning. So that's something that I'm looking for. I'm not, again, this is not something that I'm trading for the weekly time frame. I'm looking a month out on these kinds of trades, especially commodities. When they get crowded, I tend to do good playing the counter momentum for these stocks. So that's something that I'm looking out for. Overall, yeah, I mean, this war is becoming just like another COVID situation here, where again, like. Whenever we used to see 10, 15, 20 COVID cases, and the market drops 10 points on SPX, and it's the same thing now with this war situation as well, right? Like we are seeing some news outflow, and the market just tanks 10, 15%, 10, 15 points. And that's what is kind of scary, to be honest. Like I'm kind of a trader who even though like invest in the weeklies, I like to enjoy my trades, stay in the trade for a bit, at least for that day, until the end of the day, at least. Like enjoy the ride and play the momentum and things like that. But this market is like a little too crazy. Once I get in, I'm looking for exits in the next hour or so, and that's essentially how I'm playing right now.
Appreciate you sharing that, and certainly still feels like that get in, get out type market with this volatility. Definitely always opportunity to capitalize on it. And when things move 5-10%, especially if you're playing with options, that can be a big move. And to not let that go red is the absolute essence of what we are doing here. Okay, I want to take a minute while we have a couple hundred people in here to just put out there that if you're unfamiliar with the Bullish Rippers account, but you may be familiar with my voice, that's because my name is Goff Blacksburg, and I run the Wolf Financial account, doing about 30 to 40 hours a week of Twitter Spaces a week. I am doing 2 spaces a week from the Bullish Rippers account, and Stock Market News, my co-host, also does a space a week and puts out tons of amazing content from this account. So if you like the spaces you get from the Wolf account and the tweets you get from Stock Market News, this is the perfect love child account for you all to be checking out and following. Insane to see the growth within this. We've been running this account. I think I started doing spaces on it maybe like 10, 11, 12K, something like that. And now we're all the way up at, I think, 18, something like that now. So thank you to everybody that's been joining up. But again, if this is the type of content that you are liking, we do market analysis, we do long-term investing, we do industry-specific spaces, and we do power hours. So that's what you're going to be getting from here, along with a ton of other great content. Stock Market News, you want to add anything to that? Saw him unmute. Evan, you there? All right. I am not hearing him. Jay, are you hearing Evan, or is it just silent like it is for me?
It's silent right now.
Okay, I see him like unmuting. Evan, I see you trying desperately over there. Yeah, now he's popping down. I know he was just sitting there, just banging his hands.
And the struggle is real. He's
trying, praying, hoping that it would work. But what I know he was going to say is that, you all should be checking out Bullish Rippers and following this account, as well as our incredible speakers that are up here. Jay Woods, a legend in the industry. Glad I got to meet him in person the other week. Jack has been joining us for a couple of spaces now. Clearly speaks from a place of knowledge. ProblemSniper, been seeing you on more spaces. And TSDR, the boy, the homie, doing good stuff in the community, serving the community, I would say, with everything he does. Stock Market News, looks like you're back up here. Do we have you?
You hear me? Do we hear me?
Yeah, I can hear you now.
You know what's funny? What I actually said was, Wolf, are you breaking up every word? Because I can't hear you. I guess it turns out we know what the problem was. It was me. So there we go. Big shout out to that. But yeah, Wolf, you said it there exactly what I was going to say. Shout out to all the speakers for making this such a fantastic space. Check them out. Give them a follow. Check in and click what they're doing. Big shout out to Wolf for hosting this space from the Bullish Rippers account. Big shout out to Rippers for bringing all of us together. And all the listeners for coming in and getting some value from this. I know we got a really smart panel of people giving some fantastic information. So it's hard not to get some value from the spaces. So I'm super excited to be here and hanging out.
Perfect. Okay, so let's dive into a little bit of opportunity now. Go around, just give everybody a few minutes as to, we're coming into Thursday. By the way, tomorrow morning, for everybody that's listening, we'll be doing live option trading with exclusive and stock market news. Are you down to come on that 9 a.m.?
We'll see on 9 a.m., but I will be there tomorrow morning.
All right. We're going to call it live option trading with exclusive trading and breaking news with stock market news. 9 a.m. EST. Stock market news will be there bright and early. He'll be drinking his coffee. He'll be fine. If I'm getting up, you can get up, is all I'm saying here, because I don't like getting up early.
I'll be up at like 7 a.m. It's just if I want to try and be jolly on the spaces or not.
Yeah, I'll bring the jolliness for everybody. Don't worry about it. That's my job.
I got you. I'll be there.
All right. So let's go around. Actually, unless stock market news, anything else you want to add before we go around?
No, I think we're good. Yeah.
Awesome. Hey, Jeremy, just saw your message. All good. Enjoy the dinner. We got started about 40 minutes ago, but feel free to hang out in the crowd too as we roll through this next section. And Jay, let's come over to you first. First off, if there's anything that you heard beforehand that you want to comment on, feel free to. And for the next part, if you would like to throw out some opportunities and just what you're keeping your eye on, we'd love to hear that too.
Yeah, well, as far as things I've heard, I really been impressed. I've been on 2 calls today with TSDR. I've never met you before, but you speak a lot of my language and you see things in a similar light. I don't trade like I used to be a market maker on the floor, and I used to trade second by second. And you talked earlier on a different space about your emotion, and I think that's something I know Joe Fahmy and I talk about a lot, and how you have to keep it in check. And you were very humble when you were having a bad day and talked about the struggle, which is totally real, and you have to discuss these things. And I always love having those discussions with experienced traders or just people just starting to get in the game, especially the recent retail traders, because trying to keep those emotions in check and learning from your mistakes and being humble is the most important thing if you want to have longevity or make this a career. So I always love when you have speakers on that can talk about the good times and the bad times, and use all his learning experiences. So that's what I wanted to hit on from that. And then I'm going to just give you a few things I'm watching. Of course, I left all my notes at work, so I'm doing this off the top of my head, and then I have to run, so I'm going to leave after this. So I apologize for leaving you high and dry, but I promised my son I would watch the second half of this game, and family first. So when your daughter walks in the room, that's the priority, TSDR. It's not us here. Family always comes first. So I mentioned the financials and being frustrated with some of them, but the insurance stocks still act well in a rate rising environment, even though it's not going to be going up as dramatically as many had predicted. I still think the insurance stocks are a safe, boring play. Boring is something I use a lot when I do these talks, because boring is back. It continues to be back, but there are some opportunities in some beaten down sectors. But I try to stay conservative when you're making these calls. I think the regional banks still act really well. They've done phenomenal. When I say regional banks like Commerce. And I'm trying to. Once again, I don't have my list here in front of me, but the index to KRE has been acting really well, and it seems to be a safer place to put your money. And then other sectors. The reopen stocks were starting to really take off before the Russian-Ukraine crisis. I still think, for the most part, the hotels look like the best place to be. The Hiltons, the Hyatts of the world. There isn't really an ETF that I like that tracks specifically the hotel stocks. I know there's Beds, BEDZ, but it's a little. It doesn't really have a concentration that I like. I'm still looking for that ETF. So if anyone has one, feel free to shout it out. And then stocks that are coming back to life and consolidating nicely. Win has made a couple higher lows, but still going sideways, but has a lot to reverse. That could break the downtrend, or it could chop for a while. But it feels like we've dodged the worst of it. And then DraftKings, believe it or not, this one I don't like to talk too much about because it's extremely volatile. It seems like it's trying to put in a low here. We've had a couple washouts in that. It is a Kathy Wood name. It is over 70% from its all-time high, or at least from peak to trough. Now it's made some of that back. So the reopening trade, I think it will work. The airlines still have some work to do. I'm not a big fan of the airlines and the cruisers, but The hotels are acting great. Airbnb is a stock that I believe in from a personal standpoint. Technically, it's okay. It's not the greatest looking chart in the world. And then a more risky one, but a definite stock where your risk reward is set up for you is bookings, BKNG. And I just want to punch up the chart and make sure I get my level right. It was up 91 points today, but the $2,100 level seems to be a level of support. It was below there before we came into today, but it looks like one of those stocks that could make a quick move to the upside. 2-3 days, it could continue this. 4% move today was 91 points. So I believe the sector is going to do well over the coming months, and the hotels have been making new highs. And as a technician, I like to follow strength. And I know a lot of people don't like to hear the technical take on things because, well, why are you buying when stocks are new highs when these stocks are getting beaten up? Well, you know what? I've tried to buy beaten up stocks. I do like to catch falling knives from time to time in my own personal account, and it doesn't always work. Look at a firm. That's a perfect example of something I thought I got on sale. But when you do play this game, and it's fun to try to catch something and try to nail a bottom, just make sure you have an exit plan. And if you buy something, in my case, I bought a firm like at 105 when it was rallying back from 100, and I was out at 98. Thank God I got out, because I think it's at $40 now. But there are a lot of stocks like that had tremendous moves, and they got cut 20, 30, 40, 50%, and they're still not right. Zoom, perfect example. We can talk about Snowflake tomorrow, because there was one that was setting up technically and giving you levels, and it broke 250 and then some after earnings. So there's no play involved in that when I look at it technically. But there are going to be people that are going to be jumping in it tomorrow because the stock is on sale down 25%. So overall, I still think the boring play is involved, the consumer staples, the insurances, the regional banks, and the leadership here has been getting back out the hotels. And personally, I'm looking forward to getting back out myself. So, from a fundamental point of view, I think it makes sense because, we all want to get out. People are ready to go. So those are my 2 cents. I'll stay for, if anyone has any questions or wants to, combat that, I welcome the other side of every argument. But, I'll stop talking now.
Hey, Jay, thank you very much for the kind words. Excuse me, I really appreciate it. I also, firmly believe that the emotional and psychological, aspect of trading these markets is, the most important, or a very important, if not the most important, aspect, to being successful and having longevity. So I really appreciate the kind words. Thank you.
Yeah, no, and I mean it's easier said than done, and it doesn't matter how many years you do this, you're gonna have great streaks, and you can't let the highs get too high. And I have a 17-year-old son, and I've told stories about him, so people follow me. I see Jess Menton on this call. I know she knows the story, and he got emotional, and it was just like I was when I started out, and it's fun to watch those people on the highs, and we saw it with the meme stocks. And I welcome new players to the arena, and I love when retail traders get in and you see the hot stocks and look at what's trending on StockTwits or wherever you follow your trending tickers. But you just hope people are careful and don't let the emotions get the best of them, because they're investing over the long term. It's the greatest thing in the world. But if you're watching every tick, then you really have to, be on top of your game and keep emotions in check. With that, guys, I got to run. I got to say goodnight. And, Gab, it was great meeting you last week on the floor. And, anytime I can help out, I'd love to join you guys. So take it easy.
Thanks, Jay. Let's get one set up with Fami next week.
Oh, definitely. Fami and Brian Shannon. They're my guys, and JC Peretz, if we want to go all technical, maybe we set something up. So anyway, have a good one, guys.
All right, Jay, take care. Okay, let's keep it rolling with opportunities for the week ahead. Jack, all you.
Hurler, that is, right? I assume.
What'd you say?
Jack Hurley.
Yeah, the other Jack dropped off.
Of course. So what was your question? Just general.
Yeah, so general
table?
opportunities. So Jay dropped out their Airbnb booking, a couple of others.
What am I looking at? So I mean, I'm watching STEM. I spent the weekend last week, listening to their anticipating their call. I listened to their call. I looked at the numbers, and I'm going to follow up on some channel checks with them. But I built a model over the weekend, and I got to be honest, in the DER microgrid space and the energy distribution space, I think there's only a few names that really jump out to me, and this one has come in from, I think it hit an all-time high of $35 plus. Not that it belonged up there for anyone who's curious, but that's trading at like 2.5 times, and I think that their projections can put them at about a 6-cent earning by the end of the year 2022. They're very heavy weighted to the second half of the year, and they've procured most of their materials that they need. And from what I'm being told on their channels is that, the supply chain is giving them a little bit of headache, but in many other cases last year and including the first half of this year, they've went ahead and purchased most of what they need for this calendar year, and they're now procuring for 23 and 24. And this is about in line with what Fluence said as well. And so those are really the two heavy hitters that I think will own much of the microgrid or DER market. And I think that one thing that really attracts me to STEM is that they don't own the hardware assets that they procure for these companies. They will write them off over time and then eventually make most of their money on the margin for the software, which is their Athena platform. And they won recently a contract in ERCOT, and I know that they were in direct competition with Voltus and Fluence for that contract. And so they've continuously outperformed the software relative to their competitors. I think they have a data moat in terms of systems out in the field that are cloud connected and monitoring with multiple levels of data interaction across the cloud to make decisions. And I think that's going to, prove well for them over time. So that it broke $10, and that's the cheapest I've ever gotten it. I think I initially bought it at 14. I liked it at 25. It felt good owning it, but I don't chase things. And I'm happy to get it at these levels from a financial standpoint. I think the risk is really minimal given the fact that they have $747 million in cash, $316 million in debt, and the senior notes are convertible. So, I mean, that's going to eventually go to equity. So, if you put out a scenario where they do the 316 convertible and they use the 700 million for some kind of strategic acquisition that drives, additional software deployments on their systems, I could put them at about 200 million plus exit rate for revenue, although most of it still is hardware by the end of the year. So I'm a long-term value guy. I want to own the microgrid. I want to own DER for a very long time. And it's something that I've been thinking about for almost 4 years now. And so from my perspective, it's an opportunity to own one of the good players in the space for a very, very reasonable price. Another name that I'm focusing on outside that space is Enovix and Fryer, and this is more on the battery side, battery development and deployment. It's upstream of somebody like a STEM or somebody like a Tesla or Daimler, et cetera. And Enovix is a 3D printed silicon battery, and they solved a very, very critical pressure issue with manufacturing of silicon-rich anodes, which has been elusive for a very long time. And I've really honestly been very frustrated because many of these SPACs have been beat up and have come down. And Enovix clearly has a very, very strong-handed ownership of stock because they had a $100 million lockup and the stock did not budge. And so many of these people are following TJ Thurman, who is a very reputable person. He was, an unbelievable investor in Enphase in very early stages. And obviously that company has done unbelievably well. But I believe they have a very critical solution to a very difficult problem, and that is silicon-rich anode battery manufacturing. And if anyone in the world wants to do 3D printed silicon anodes, they're going to infringe on this patent. And so they're very intelligent in doing consumer products first, and then EVs second, for simplicity purposes. But I think they're going to have multiple wins. They have AR, VR already in their belt. They're going to have a laptop smartphone most likely in the first half of this year. They'll start talking about that. They've hinted at it. And I think the fab lines will be licensed, which is more attractive from a financial standpoint. And clearly the hands holding the stock are stronger than I would have anticipated. I'm surprised. I wanted this thing at $10 and it doesn't look like I'm going to get it. So I'm optimistic I can get it slightly cheaper, but it doesn't look like there's weak hands in the stock. And there's a reason for that. And it's because they have a very viable impressive engineering solution to a pressure containment problem on a silicon anode battery. And so anyone who wants to talk batteries, I'm happy to follow up online on some of the specifics. And then Freyr, F-R-E-Y, is a Norway company doing LFP NMC semi-solid batteries with 24M. They're just one of those battery SPACs that I knew about prior when I was researching Northvolt and Hydrovolt and Italvolt. And, they've just consistently done what they said they're going to do, and in the world of SPACs, that's probably tough to find. And so they talked about financing, they talked about Gigafactory 1, they talked about their manufacturing lines, they talked about doing offtake. And every time I call them and I talk to them and I lay everything out and ask them about, hey, it looks like you can do a little bit of extra capacity in this factory. If, as an engineer, if I can spec out what I think you're going to do, it looks a little conservative. A couple months later, they say, we can actually double the capacity. And so, they say they're going to get financing, they get the financing. They're going to do a North American factory. A couple weeks later, it comes out. And so in reliability and credibility, they've built that up with me. And I know the 24M people relatively well from academia work, while I was at Exxon. And I know the semi-solid space is probably more likely to steal market before somebody like a QuantumScape. And there's specific reasons for why. And one of the main ones is manufacturability. It's more practical that we do a semi-solid before we do something like a QuantumScape. And I think 24M, as elusive as they've been to the public market, is not bluffing. And so Freyr needs to get to scale, but they have $5 billion plus in contracted revenue, and they just have to execute. And so I've been slowly building that for, I'd say, 6 to 8 months so far. And I think I have a calendar year before I really have to stop. And so, I'm plotting that out over time, and I'm keeping in touch with the management, but they've consistently done what they said they're going to do. And financially, they're going to get probably 70 to 80% funded for these factories, which takes out a lot of the CapEx. And they don't own the technology, which is a little disappointing, but 24M will go public at some point, and I'll own that as well. And so I also follow two companies that are involved with them, Iguana and obviously Volkswagen to an extent. But Iguana is a downstream partner of theirs that's doing residential batteries with Duracell and some other big names. And so I'm very entrenched in this story of that ecosphere. And I think that they're one of the rare cases that have done what they've said they're going to do. And financially, they're trading at a fraction of their projected revenue. So even if they don't own the technology, they're going to have a cost competitive advantage because of their renewable energy picture in Norway, especially. But they've indicated that they're going to have that set up for each factory that they own. And so if they do that at a cost competitive parity to other battery manufacturers at a time where LFP and NMC are at peak demand, I think that the funding will show up. And I think I have probably a year and a half before they hit scale. And so that gives me time to build a decent position. I want to pay a good price. Today is a good price. And that's kind of my sentiment. So that's a lot of what's on my plate and what I'm looking at. And I'll leave the rest to any questions, and I'm happy to follow up offline with anybody.
Really good stuff there, Jack. Evan, do you have any thoughts on that? Because I know what you love when people go into like the nitty gritty with the fundamentals, and I feel like that was perfect with the patent and everything there.
Yeah, honestly, the problem is that there's certain sectors I love listening to it. It's just over my it's hard for me to come back with questions. I don't know too much about it. So definitely some fantastic knowledge there, and some good starting points for me to start digging off into deeper. But yeah, the whole technicals area, I'm a finance guy, and I know that, and that's why I kind of let the people come and do the research.
I try to bring the numbers in on the finance side of like the balance sheets. I'll definitely lean into that a little bit more when I know you're in the space. I appreciate it.
Really good stuff. So
that was perfect. I love that stuff when I'm on here because it fills in a lot of the stuff that I don't know, and that's what I come on these spaces for. But yeah, perfect.
So which tickers, if you had to kind of put specific tickers to that, the ones you just covered, would you go with?
So if I had a list of things that I'm actively buying over the coming, until the second rate hike is finished, I mean, in ranking of priority, I would put PL at the top, Planet Labs, which I didn't mention. Innovix, ENVX is the 3D silicon battery company. FREY is Freyr. And I think that's all I mentioned.
Give me the quick version.
Oh, and then STEM. I'm sorry, STEM. STEM. Stemming.
Can I hear a little bit of your thoughts on Planet Labs? It's one that I own a tiny bit of.
So
I'm in at like 570, 560, so it's not too bad. Actually, it might be a little higher.
That's a great price. So I'm if you haven't
I
noticed,
lied.
I'm a little bit of a
$6, $7.
nerd, right? And so I love hearing stories early on. I bookmark them and I keep up with them as best I can. And when I have the availability to buy them on the public market, I start a ticker and I buy it the day that I first can, and I build it over a long period of time at a good price. Planet is a satellite Earth data company that, if you want to put it in the most basic terms, they took a bunch of nerds, put them in a garage, and said, I wonder if we can image the Earth every single day, right? Can we do that? And they said, well, I don't know. Let's figure it out. They did that for years, probably 2.5 years, 3 years. And they figured it out, how to do it. I mean, not that that's uniquely novel, but the cost at which they were able to do it was. And not only that, but signing the deal at the lowest cost launcher, SpaceX at the time, was also very unique. And so that entity was a spin-off from Google, and that was called SkySat. So Planet Labs bought SkySat for an undeterminate amount of money. It's probably public knowledge now, but at the time it was, they didn't list the number. They also bought VanderSat and a few other small niche manufacturing companies for a lot of these parts and like engineering solutions for the satellites that they were going to build. And they now have amassed about 240 satellites that constantly are revolving around the Earth, giving it an image in multiple spectral bands, which is important from a customer perspective. But the way you could think about the story is everyone had this paradigm where you had to build this big, expensive satellite, think of somebody like a Maxar, and put it up into space that has all these big capabilities similar to like a desktop. And what Planet did was say, no, instead of a big, hefty desktop, we're going to have hundreds of small little smartphones that are going to go around the Earth and be at each axis, multiple axes, by the way, they'll rotate and create this constellation where you can look at any point in the Earth at any time within this certain agreement period. And that's a moat. That's unique. No one else is doing that at the time. Satellogic is probably the second closest, but they don't have their constellation up in the air. And so Planet Labs has the first mover advantage to this. They can expand their capabilities as they put up new fleets, and the cost of putting up their satellites is next to nothing. And so they're going to constantly be replenishing these satellites. And the cost of doing so is probably around $15 to $30 million currently. And they're going to bring that number probably down to 10 or 15 million, and maybe they can get it sub 10 million, depending on, a couple of corners they can cut here and there. I don't know the specifics around the cost cutting. I'm digging more into that as I speak to them. But the way you can think about it is, as people go forward, you're going to have to report carbon emissions. You're going to have to report life cycle analysis. You're going to have to report your entire footprint as a business to banks, to lenders, to governments, to all of those regulatory agencies that are going to go and ask you, hey, what was your carbon footprint last year? Because these investors want to know about it before they buy you. And the only person on the planet Earth that can reliably give you that data on a time series basis today is Planet. And so they have probably a year before anyone else has that capability. So within that period of time, they have to go pitch to a bunch of businesses and sell why they're better than everybody else. If they do that and they lock in these contracts, probably 5 to 10 year contracts with these consumers in multiple sectors. I mean, you think about who wants this data. This is they put it as, we're the Bloomberg terminal of Earth data. And for someone who uses a terminal and, will never go back to the old way, you would have to take my terminal from my cold, dead hands before you take that from me. And that's how these people are going to feel about the Earth data that they're going to collect. And it's not going to be available anywhere else until middle of the year 2023 at the earliest. And so they have to market their data the right way. They have to expand their spectral bands, which is they've started doing. I think they came out an additional 4 to 8 spectral bands on the Super Dove. And think of it like a smartphone where each iteration of satellites that they put up can have these incremental spectral improvements and technical improvements that the new customers are going to want to know about. And so they have to put up these methane sensors next. That'll be interesting because people are constantly looking at methane leaks in old oil and gas wells, et cetera. But think about what capabilities they're going to put up that other satellite companies are not even going to be thinking of. And that's the team of scientists that they have, because these are ex-NASA, these are ex-SpaceX engineers that are forward thinking. And so they're going to start anticipating business needs that banks and regulatory agencies aren't even thinking of yet. in these next iterative designs. And so if you ask me what I want to own, right, for 5 to 10 years, that's the timeline I like to think about. This is probably my favorite investment out of all of them. So like currently right now, and it all started with SkySat. And when SkySat launched with SpaceX a few years back, I remember saying, I want to own that business. And I couldn't, but now I can.
Love it. Evan, any follow-up on that?
No, that was perfect. A lot of the sensor talk in there was fantastic. I didn't know too much about the small satellites, so it definitely is great to learn in there. Does that kind of make it easier for people to get into it and to kind of get up to where their satellite constellation is now? If the cost of satellite is easy to get up, is their moat a little smaller than kind of you would be expecting with putting satellites up?
It could be, and that would definitely be a concern. What I would more focus on is the customer moving from one platform to the other. So when you're Citibank and you have this database of all of your clients and their ESG data, how quickly are you going to switch from Planet to Satellogic, right? If Satellogic comes and offers you the same thing or a similar thing, how hard is it to drag them away from Planet to Satellogic? That's the most important thing to defending their business. And so, Satellogic is interesting, but that's the question I would be asking. And I don't even know because I haven't experienced their platform yet. I'm getting a demo on it next week, so I'll see what I take away from that. But I would tell you it's very difficult to do that. And Bloomberg, look at what Bloomberg has done. Anyone working in the business sector using FactSet or any of these competitors, what do you say? It's sort of like a terminal, right? You don't say it's sort of like FactSet.
Perfect. Awesome, Jack. I love the depth you went into there. Certainly an expert in a few industries, and that's a really great take on what PL is doing. And honestly, I find that so fascinating because I know there's a million use cases, but to be honest, sometimes I have the Google Earth app, and like sometimes I'll just like scroll around and just like use it to like look at different areas, and I think it's awesome. But the fact that they're doing it on a daily basis and the amount of things you can do with that blows my mind.
Yeah, Google Earth actually used to be Maxar, but the newest, if you look at where they update Google Earth now, it's actually via Planet. And so that should tell you the difference in capability between the two ways of approaching satellites. Because Maxar can only update that point on the Earth when their satellite is in range to update that image, right? But Planet is always in position to update that image.
Yeah, that makes sense. Okay. Yeah. I mean, I just, the one thing I'm always wishing, is, hey, I wish this was more recent, more updated. And it feels like this is kind of where that's coming from, like this is where that's going.
Yeah, absolutely. And the same, it's a similar paradigm to STEM, right? If your energy distribution is similar, you have data points from all these different places. You have to be able to read, analyze, and predict how you want that to be distributed, right? Same, relatively similar paradigm, but different application, obviously. So happy to follow up with anybody. I really appreciate you putting these spaces together. You guys have been unbelievably good hosts, and I recommend anybody to go to Bullish Reports, Wolf, and Stock Market News. You guys have been great. So I appreciate the time and the energy. Anyone feel free to follow up with me, one-on-one anytime.
Love it. All right, ProblemSniper, coming to you last. Opportunities for the next week. What do you think you'll be buying?
As an options trader, I'm looking into chips, especially Qualcomm and AMD, because they have inside days today. I think they have quite a bit of move on them left. Given if we see some rotation out of oil, money rotating out of oil, I think chips are the ones that might move. Specifically AMD, that chart really looks like it's bottoming out and is trying to move higher with the price target of 125 plus. So that's something that I'm looking out for. Tesla is another one which is looking pretty with Germany coming out with that Giga Berlin news pretty soon, and with them expediting the process as well. So that's something that I'm looking out for a swing trade. Probably let's see how the levels hold on Tesla, specifically on the downtrend break on the weekly time frame. All in all, just looking at SPY, I'm looking at that 437.50 level and 440 level tomorrow. If 437.50 level kind of breaks, we're going down to 434 and 430 again. But if we kind of can break above 440, 444 is the nice test there, which also inclines with the downtrend test on the weekly time frame on SPY. So if we can break above 444 and probably uh, uh, close above that on the weekly time frame, I would be inclined more bullish into next week as well, with a test of probably a test of 450, 460 into next week. So those are practically my plays. I just don't look at a lot of stocks, just a very few large tech primarily.
Yeah, definitely makes sense to me. Appreciate you sharing those with us. Thank you for coming on tonight at short notice, just coming in and popping up. Awesome.
Definitely.
Yeah. So one more time, want to reiterate, please make sure you're checking out our speakers. They are fantastic, as well as the codes that are on here. If you like these type of spaces, market analysis, power hours, industry analysis, long-term investing, things like that, that's what we host from the Bullish Rippers account. Also, you'll get a feed full of stock market news tweets, and nothing wrong with that. Always betters the day and adds to your intellect. With that being said, I think we've made it through a little bit over an hour tonight, which we really enjoyed. Evan, I'll throw it over to you if there's anything else you want to put out, or we can go to closing comments.
Yeah, I am walking outside right now, so I don't know how windy or how terrible it's going to sound. Just going to echo the points. Big shout out to all the speakers for coming in and making a fantastic space. I know a couple of them had to drop off at this point. TSDR, Jay Woods. But yeah, this was a fantastic space, and it's very much thankful to them. Big thankful, and big shout out to Wolf for helping us put together and host the space, and Rippers for bringing us all together. So love it. And I think we're good to move up into wrap ups.
Perfect. Yeah. Oh, what'd you say? Okay.
Honestly, just one of those random things I throw in at the end when I probably shouldn't have, but we move.
Yeah, absolutely. We love rolling with it. And again, just a reminder, and I'll pin this up top, for everybody that's in here, we have our next space coming up at 9 a.m. EST. I already put out the reminder link for it. I am pinning it up top right now, so it is pinned up there. So everybody, if you want, that is going to be live trading, specifically option trading, and that will be at 9 a.m. EST tomorrow. So you can go ahead and set your reminder now if that's what piques your curiosity. With that being said, let's throw it on over to our speakers for any just closing comments, advice for retail as they navigate this wild market. Jack, do you want to go first?
Yeah, sure. I'm the patient guy in the room. I just would caution everybody to really be defensive in these moments. And I'm not a day trader. Just as a full disclosure, I'm the person that wants to own a really good business at a fair price. And so I think it's valuable to find them at levels and to be really patient with these things and to do it over time. And so my general sentiment is that right now macro is driving nearly everything in the market, and that's why indiscriminate to news or headlines or whatever else comes out, everything is getting taken away for profit. So if something does run, you got to pay yourself first and make sure that you have free cash flow to kind of survive, and that's important. And that's something that you'll learn over time. It's 15 years. There's strings of 5 to 6 years time where I wish I'd done that. And so if I could give anything to anybody, I would just say make sure that you generate a decent amount of cash flow in the interim and wade in the water until kind of the macro winds get behind us, and then the individual companies have to come out and shine in the second half. And so that'd be really my only closing comments, and that patience wins out.
Perfect. Thank you, sir. Looks like ProblemSniper had to drop down. No worries with that. He was great having him on here. I think Evan is good for the evening because he's outside and walking. So I'll finish it off with this. Crazy times in the market doesn't mean that we have to react with crazy trades. We can still be very calculated. There's multiple approaches here. We heard from long-term investors tonight as well as short-term investors, but they all had something. They had a plan. They're going in with knowing when they want to buy, and they're going out with knowing where they want to sell. So for some of them, that's years, decades, maybe never. That's still a time. For some of them, that's 5 minutes, an hour, right? But they knew when they wanted to do these things. And what they knew also was how they were going to calculate and find these opportunities and maximize them. So with all that in mind, really appreciate everyone that joined us tonight. Hope you garnered something from this. We had a bunch of names thrown out as long with analysis for them. You can check the replay on this if you want to dig into them further. We had Jay Woods, TSDR, and more on earlier. And we'll be running this back more often. We are going to have our next Bullish Ripper space tomorrow at 12. That's going to be long-term investing. I know that Brad Freeman's always on that. Usually Stock Talk Weekly's on it, and potentially some others. So we're looking forward to that as well. And stock market news. Anything else you want to throw on this one?
Sorry, nah, dude, I am all good. Perfect. Big shout out to you for helping us host and put together this space. Shout out to Rippers for bringing us all together. I'm excited for that 9 a.m. space tomorrow morning. Sorry for all the background noise.
Nope, you're all good. All right, we're going to go ahead and close this one out here. Thanks, everyone, for tuning in. Have a great rest of your evening.